way. I wouldn't see us considering rate cuts until the committee is confident that inflation is moving down to 2% in a sustained way. So that's the test I would articulate. And you're correct. There are not rate cuts in the SEP for 2023.
What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Now, having a look at what Bitcoin did yesterday leading in to the FOMC, we did have this crazy spike, and basically as soon as the meeting started, we had the dump, and then as Powell was speaking, we had even more of a dump. Now, it wasn't just Bitcoin. We also had the S&P, you could see putting in this candle, actually as I'm speaking right now, attempting to hold above this previous resistance. We, are hopeful that that might happen, right? But you did see right here that we also had a little bit of an uptick on the DXY. Now, you might be asking yourself, why did this happen? We got the 50 basis point. Wasn't that exactly what the markets were pricing in? Yes, but that's why I said in yesterday's video, we had to pay attention to the tone of Powell's voice, and it was what he said and their projections which really affected the market and why we saw everything slide to the downside. Now, I do want to talk about this because I'm going to go over what happened, although there are a lot of economists that are actually calling the Fed's bluff right now, basically saying that they're not going to go through with all of this hawkishness like they say they are. I do want to talk about that, but I also want to talk about Bitcoin specifically because not only, obviously, now we do have this situation with higher, rates potentially, but there is also something very dangerous for Bitcoin that we do have to go over that we cannot ignore. And this doesn't have anything to do with the Fed or regulation. So I do want to give that warning. We must keep our eyes on that moving forward. And of course, if you guys didn't see, also Kevin O'Leary came out and is trying to blame basically the collapse of FTX on CZ and Binance. So crazy stuff. It's amazing what $15 million in payments will do and persuade your perception on things. But if that sounds good to you guys, definitely get subscribed. But before we get into the charts, I just want to start again with what we saw yesterday, because you could see, if you go over to the shorter time frame, this was absolutely crazy. We were just leading into this crazy parabolic rally, and then boom, we came out, a little bit sideways. Powell started talking, and we started falling even more. So the thing also to note is that we are actually below this support right here. You could see we actually have fallen below that. So we will talk about that. But if you guys didn't see the clip, here's sort of the major component.
We understand the hardship that high inflation is causing, and that we are strongly committed to bringing inflation back down to our 2% goal. Over the course of the year, we've taken forceful actions to tighten the stance of monetary policy. Even so, we have more work to do. Today, the FOMC raised our policy interest rate by a 0.5 percentage point. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Restoring price stability will likely require maintaining a restrictive policy stance for some time.
So the main issue, obviously, is that the Fed is now expecting to raise rates at the end of 2023 to about 5 to 5.25%. So this is higher than the original projected 4.5 to 4.75%, right? So according to the policymakers' median forecast, it estimates that it will cut the rate to around 4.1% by the end of 2024 to support an economy likely to be weakened by the rate increases above the 3.9% predicted in September. But we have a lot of economists coming out saying that they're predicting a mild recession possibly next year, and they aren't convinced that the Fed will need to raise rates as much as it's projecting. Now, why is this? Well, it sort of seemed like in the beginning, Powell came out, he was very aggressive, very hawkish, and then later when they asked him some questions, he seemed like he kind of softened down a bit. Here's a clip. Let me know what you guys think.
I think our policies end up getting into a pretty good place now. We're restrictive, and I think we're getting close to that level of sufficient, we think, sufficiently restrictive. And of course, we welcome these better inflation reports for the last 2 months. They're very welcome, but...
Well, do you think the soft landing is no longer achievable?
No, I wouldn't say that. No.
So when you consider how much we actually had the traditional stocks getting rejected, the fact that Bitcoin did not plunge even lower after Powell's comments yesterday could also be due to the fact that the market does not believe Powell's words. You can see former Fed Governor Frederick Mishkin over here says that the Fed's hawkish policies increase the risk of sending the economy into a recession. In this case, political pressure on Powell would increase. You have star investor Jeffrey Gunter Gundlach of Double Line Capital expects a recession in the first half of 2023 when the Fed would do an about face and cut rates again. The concern that monetary policymakers could do great damage to the economy outweighs the will to fight inflation, he said, even if central bankers are saying something else at the moment. So, you know, in one hand, you have the conspiracy theorists that say they're going to do the Great Reset, they're going to collapse everything. Although, if you do believe in, you know, eventually them pushing the CBDC, maybe they would wait a little bit since that pilot isn't exactly ready just yet, but that's for another day. But as you can see right here, they're saying that, you know, the damage that could be done outweighs the ability or the will to fight inflation. Now, Powell's saying the complete opposite, right? Powell's saying inflation is number one. We don't care basically what happens to the economy. You know, we know that unemployment's probably going to go up and people are going to get hurt, right? So we do know either way, though, there will be a Fed pivot. But the thing to remember, and, you know, Crypto Dom has pointed this out. Thank you for this chart. But just historically speaking, and we've actually mentioned this on the channel as well, what's really interesting is whenever we actually do have the Fed pivot, we see a major correction in the S&P, right? So does that mean that when we actually get the pivot, you know, it's probably not going to happen until sometime next year? Does that mean that that is when we'll have the crash? Because if that's the case, then we could continue to see the stocks and Bitcoin maybe rally up until that Fed pivot if history was to sort of repeat itself, right? You know, the only thing right now is that we are going down, obviously, as they're raising these rates. So is it one of those history is going to repeat itself things? Generally, the reason why you see these type of declines is not really because of the actual Fed pivot itself, but it's usually because the circumstances that we're in are so bad. For example, a recession, you know, or a Great Depression or something like that, that the Fed is then forced to pivot. So it's not really as much of the Fed pivoting that causes it. That's just a reaction to the economy at the time. And it's almost like it was bound to happen either way, right? But, you know, they're still saying soft landing possible. So that's ultimately what we're looking at. And the levels that we are expecting, we've almost touched it right here. You can see that we did slightly break through that level. And remember, and obviously currently, unfortunately, guys, we are sitting below this pivot of around, you know, this $17,592 level, which is not good. I would have liked to have held above that. I talked about that yesterday. We did get rejected by this key support right here, right? Little bit of a fake out and boom, down. So the levels that we're looking to hold ultimately, you know, the best case would be to hold above this flag, right? So that area is very, very close to where we are right now. That's about $17,300. And this is something that we had expected yesterday. You don't really want to fall back into this for too long because then what you get is a fake out. And, you know, going back to previously looking at what these do, well, what do they do every time we get to the end of a flag? We dump, we dump, we dump, we dump. And that's exactly what we don't want to do here, right? So if this turns out to be a fake out, right, and then we do end up back inside this pattern, then that does risk us going lower. So ultimately, like I said, the level of first support is around 17,300. And if we do end up falling slightly back into this ascending triangle, then I would want to be supported on this trend right here, right? So the lowest that Bitcoin can go, in my personal opinion today, without risking a reversal to the downside and falling back into that flag, is 17,225. It coincides right here with this wick, and it also represents a majority of the resistance that we were having right here in this bull flag, right? We had like a bull flag inside of a bull flag. So that is the level honestly where you'd be looking to long, and, you know, anything sort of below pretty much, you know, once we start falling below around 16,820, then I would just cut that. So obviously, if you guys do want to learn how to trade, make sure that you guys check out the tutorial above. There is over $46,000 in bonuses. And like I said, I do believe that it's the best tutorial on BitGet if you guys haven't seen it yet. But the big issue right here is you can see we were in this clear downwards channel. And I had pointed out too, let me just get this so you guys could see. So we were doing something very similar back here, 2017, 2018, right? We were in this channel. And eventually, once we broke through this heart line, this center, right? And this is a perfectly parallel channel, right? You can just pull these tools up. Perfect parallel channel. Like, I didn't draw these by hand. They're literally equal channels. And you can see right here, as soon as we had that breakout, that's when we started trending to the upside. Well, unfortunately, as I zoom in right here, you could see that every time we get above this, we get rejected, right? We had fake outs right here, a little bit of a fake out here, pretty big fake out here. This definitely caught some people off guard. But then, of course, we had the whole FTX debacle. And currently right now, you know, if we zoom in, you could see that we had that fake out again. So, you know, this upwards sloping trend that's been supporting us, you know, basically, this is putting us at around $15,866 if you want to maintain, you know, this massive upwards trend that we've never fallen below except for the one time in COVID, which we did close above it the next week. So I did say that there was that possibility of a fake out, you know, crash or wick or something like that, possibly down to around that $13,000, $12,000 area. But if we do go down there, I do not expect us to stay down there very long, right? But what is this big threat? Well, it seems like a lot of people may have forgotten about this, but let's not forget about Genesis, guys. Genesis is still going through sort of an issue, and Cred broke down the timeline, and, you know, basically Genesis, November 8th, no material net credit exposure. November 9th, we lost 7 million. November 10th, okay, we have 175 million locked in FTX. November 16th, sorry, no withdrawals or new loans. November 17th, okay, we need $1 billion. November 21st, we'll go bankrupt without the money, right? But getting back to Andrew over here, and, you know, he was the one that sort of broke that news with Binance to Dylan LeClaire yesterday. He says he chatted with a key Genesis trading creditor today, or a few creditors, and this is the situation. So it's not just $1 billion. Genesis owes more than $2 billion to creditors. Genesis bankruptcy triggers more than $1.5 billion in callable loans from Digital Currency Group. And if Digital Currency Group was to have a bankruptcy, that would trigger a huge Grayscale Bitcoin Trust, or GBTC, liquidation. So circular firing squad, nobody has any bullets, or in this case, capital, right? And this could sort of be that final black swan. Now, I don't know if this is going to happen. You know, we don't really know what to expect. We thought maybe the worst was FTX. If this was to happen, this would not be good. This would not be good short term. I'm just going to be honest with you guys, considering, and we've gone over Digital Currency Group and, you know, their portfolio, they have their hands in like over 200 companies and projects. They do own Grayscale. They own CoinDesk, right? And yeah, so basically in a nutshell, this would be that final straw that broke the camel's back. Now, I don't believe that it would be like unfixable or unsalvageable. I think it would be, and I hate to say it, good long term, right? But short term, it could definitely throw a wrench in the gears for cryptocurrency. Although outside of this, what else really is there? Binance? I mean, I don't know. Is there any other exchange or situation that could be bigger than this? I don't know. So, you know, between this and the Binance situation, the Tether situation, maybe, but Tether FUD has been, I've been hearing about the collapse of Tether since I got into crypto, and it's never happened yet. So, you know, whatever, we'll see. But between the Mt. Gox, Tether, and then this situation, I think Genesis would be a very, very, very bad situation if they truly were to go bankrupt, right? So I don't want to just end on all doom and gloom, though, because we do have Bitcoin hash rate hitting an all-time high. And even though you can see right above me, it took a little bit of a dip, right, when we had that crazy flush from around, you know, $20,000 all the way down to, you know, 15. But we did actually bounce back up, which is interesting. Now, why are we seeing hash rate going up if we're hearing about miners capitulating and all this other stuff? Well, actually, there's a pretty simple explanation. It turns out that a lot of the Ethereum miners that were mining proof of work for Ethereum, now that it's moved over to proof of stake, they've pretty much pushed their operations and repurposed from Ethereum-focused GPU to Bitcoin mining-enabled ASICs. So a lot of those Ethereum miners have actually moved over to help support the Bitcoin network. So in a weird way, Ethereum going proof of stake was better for the proof of work aspect of Bitcoin because we kind of sucked up all those extra miners, right? So that explains that. And what is interesting is, you know, again, guys, despite all this negativity and price action, you can actually see that sentiment data shows that addresses holding between 110,000 Bitcoin have bought $726 million worth of Bitcoin in just the past 9 days. So these are obviously big whales that are buying, right? And you're seeing multiple wallets between 100 and 10,000. That's a lot of Bitcoin, guys. I mean, 100 Bitcoin is a lot of Bitcoin. And, you know, these guys have been accumulating at a rate of $726 million over the past few days. Also, he points out the fact, or Sentiment points out, that we do have stable coins being bought up quickly as well. So this is kind of interesting. Stable coins being bought up could signal that, you know, they're worried that prices are going to fall lower and they're waiting to buy the dip. But at the same time, we're also seeing accumulation at these levels. So take it with a grain of salt on the stable coins, but the accumulation is undeniable. I mean, if you're buying Bitcoin and you're accumulating it and you're holding it in wallets, that is undeniable. What they're planning on doing with all these stable coins, maybe they are waiting for another flash crash or a black swan event or something like that, right? Also, speaking of black swan events, FTX, Kevin O'Leary came out. I'm sure you guys have seen the clip, but basically he was blaming Binance for the collapse of FTX at the Senate hearing, saying that there's a war between Binance and they were at war with each other and one put the other one out of business intentionally, while adding that Binance as the winner of that is now a massive unregulated global monopoly. So now he's coming down on Binance. Now, I don't know how Binance operates. I have not used Binance in years. They kicked me off a while ago. I think like 2 years ago, they kicked me off. And Binance US doesn't work for me in my jurisdiction. So I don't use Binance. I would like to trust that they are legit and that they say what they have and they can do what they do. I mean, I've seen Binance do a lot of good in the past. I've seen with the Seifu fund and hacks and, you know, rolling back issues where, you know, there was a glitch and people got liquidated and they said, no, hold on. They reimbursed everyone. So I've seen Binance do a lot of good. Do they do shady things in the background? I mean, who really knows, guys, at this point, right? With any of these exchanges, who can you trust? But was the fall of FTX due to Binance? No. I don't think so at all. I think it's very clear that FTX brought it on themselves. So ending on some good news, guys, though, we do have Consensus, the developer of MetaMask, announcing a partnership with PayPal. So now using mobile MetaMask in the US, you'll be able to buy Ethereum within the MetaMask app using PayPal, meaning that you can buy and transfer the crypto from PayPal to MetaMask. So this has only been rolled out to a few users at this moment, but nevertheless, I do think that's pretty cool news. So yeah, still a lot of adoption happening in the background, right? And again, guys, I can't stress it enough. You know, definitely get your coins off exchanges if you're not trading. I'm probably going to just keep saying this until I'm blue in the face. If you guys do want to get the new Ledger, I highly recommend it. I mean, I've never tried it, obviously, but it looks cool. I've used Ledger products my whole time in crypto. I've never had an issue with Ledger. It's always been a pleasurable experience, good customer service, good user interface, and yeah, you can sleep better at night knowing that your crypto is safe. So if you guys are interested, check out the links below in the description if you want to help support the channel. You know, obviously, you know, it's not a lot. They give me like small percentage, but it does help. But you guys don't have to. I just highly suggest that you do get a Ledger. And if you are interested, make sure to watch the tutorial too on how to use the Ledger or how to trade popping up right here, right now, and take advantage of the bonuses, especially in the bear market, guys. So thanks again for coming back. You guys rock. My name's K-Dub. This is Crypto Zombie. Until next time, stay crypto. And of course, peace out.